Well, hello, we are live. Happy Wednesday, everyone. Thanks so much. Yes, thank you. Thank you for checking back in with us. As you remember from last time that we started this new series, we want to provide you with as much information as we can to help you have better information and be more educated on the loans that you need in order to purchase a home. And I guess we should introduce ourselves. I forgot, right?
Well, I would hope most people know us. I'm Peter with All Western Mortgage.
Robert with Realty One Group, and he's right. We're famous. People should already know who we are. Just kidding. All right, so last week, or it's been actually 2 weeks since we started, and we started this series that we really hope is going to help you in your buying process. And last week we talked about the different types of financing, right?
Yeah.
And this week we're going to hit on the next step, which is down payment. Why is this important? Oh man, I get questions on this all the time. And surprisingly enough, even today, I still get questions from people who call me and say, Robert, I would like to buy a home, but I don't have 20% to put down. And that being in the business for us, it's surprising that people still have the misunderstanding that you need that much to put down. So we want to help you today to give you information about different ways that you can purchase a home with no money down, with a little bit money down, with as much as you have. We're gonna only hit the basics because this could take, like Peter said, probably over an hour to discuss.
We can literally talk about down payment for a couple hours here, so we'll try to narrow it down to a few minutes here.
And the reason why is every situation is different. So each borrower is going to have a different situation, and that's going to determine how much money they need to put down, or they can put down, or what they could get away with.
Yeah.
So let's just jump right into it. I think probably what people want to hear most about is being able to buy a home with no money down. So let's talk about any programs that you have, Peter, that people could get into a home and not have to come up with so much.
Well, there are some programs. There's been programs out there for years that have zero down. There's programs that sometimes they come on the market for a few months and then they disappear. Sometimes they'll be out for a couple of years and they disappear. The most common one that's been around forever is your VA loans.
Perfect.
Right? There's advantages. VA is probably one of the best loans out there. The downfall with VA is not a lot of people qualify for VA.
Yeah.
So VA is that you had to be in the military, you have to serve in our country in order to qualify for VA. So,
and they deserve it. I just wanted to say that we absolutely should have benefits for people who have fought for us.
Yeah, so literally 99% of the time, if you have VA, that's probably the best way to go. There's only a few exceptions where a conventional will be better than VA, and that's usually when you can put down at least 20%.
And just a little side note on that, what does that mean? Like, so if you're a VA borrower, basically, how much do you have to come out of pocket in order to close on a loan?
Well, you can literally set this loan up where you can come in at the closing table with no money out of pocket.
Beautiful.
So if you can get your agent, and I know Robert's done this for actually most of our clients, is negotiating closing costs.
Yes. You
can have the loan be a zero down loan, have your closing costs negotiated for. I've done many VA loans where people walk into the house with absolutely zero out of their pocket.
Okay. And I've actually seen two situations where the VA borrower at closing even got their earnest deposit check back because we were able to negotiate everything. Like Peter said, that the closing costs were covered. In a VA transaction, there are certain closing costs that the seller has to pay for them, right?
Yeah, there's a few costs that the VA will force the seller to pay for. So in those cases, we always have realtors negotiate where those are included. But in most cases, we can have all their closing costs be included. So obviously VA is the way to go, but not everybody qualifies, which we'll take a couple other loans here. So another one that I've done quite a bit of is the USDA.
Okay.
So USDA, for those of you that are not familiar, there's advantages and disadvantages to this one also. USDA is a rural area. So if you're willing to move out to the outer skirts of Maricopa, you could literally walk in, just like the VA loan, walk in with no money out of pocket, have your closing costs negotiated for it, and you obviously you don't have to come in with any money. USDA has sort of moved their boundaries over the last few years. So as the city grows, the boundaries keeps getting expanded. So there's limitations on USDA. I've had a lot of people who says, you know what, I don't care where I live. Sometimes truck drivers will tell me that.
Exactly,
you know what, I just need a place. I drive cross country. I just need a home that I can come back to, and sleep at. So USDA is a great loan if you're not particular about where your property is located.
Right, that makes sense, and that's kind of the side note I wanted to mention on that. I know that works really well and there are buyers that I talk to that want to be outside of the city. They want a little bit more land. They don't want the HOA restrictions. And to be able to get into a house like that for zero money, that's a great option. So if any of you out there are looking for something like that, write him a comment, call, and he'll give you more information.
One thing I want to add to that, so if you want to know what areas are, you can just call me, email me, and I will send you a link.
Perfect.
That would actually tell you exactly what areas are covered or where those boundaries are, or you can even type in an address and it'll tell you if that is eligible or not eligible.
Love
so it's very, very simple.
Love it. All right, perfect. Now I know one of the more common loans these past few years have become a DPA, what we know as a down payment assistance loan. And that, again, I think there's 2 or 3 different ones that people could qualify for.
Yep.
So tell us a little bit about that.
Yeah, so let's talk about DPA. Obviously, DPA stands for down payment assistance. There's a few of them out there. We're pretty much set up with all of them. Now, there's advantages and disadvantages with those. Usually with DPAs, in most cases, they're going to have a higher interest rate.
Right.
Okay.
Yep. Makes sense.
That's number one. Number two, sometimes people assume that if you go with DPA, meaning that you don't have to come in with any money, you don't have to have any money, which is not true. You actually have to have reserve. You have to have a few months in reserve.
Great point. Okay.
So I have a lot of clients who will say, hey, I have no money whatsoever, but I like to get into a house with no money down. So we do have a program for no money down, but you still have to have reserves.
So you have to have some money in the bank.
Right.
That's what reserves mean. That shows the bank that, God forbid, something were to happen, you're able to pay that mortgage at least for what?
Exactly.
2 months, 3 months,
usually,
6 months?
Usually it's about 3 months.
3 months.
Usually it's about 3 months that what we look for. But they want to make sure that if something happens, you have a situation where you lose your job or some extenuating circumstance, that you can at least make your payments for a couple of months, 3 months.
Perfect.
So that's number one. Number two, with DPA, they're going to be very strict on the underwriting and they're going to be very strict on your credit. Okay. So they're not going to make a lot of exceptions when it comes to your FICO. Normally they're looking for a 640 FICO score as opposed to a 620 or even 580 with FHA. And they're also not going to stretch out your ratios. So with FHA, just to give you guys a little bit of a overview, sometimes the guidelines will say, hey, you need to be at 45% debt to income ratios. But they're willing to stretch those ratios out sometimes as high as 50-55% depending on your scenario. Well, DPA, they will not. They won't even go 1% over. So they usually want you to be right around 45% debt to income ratio.
Okay. Makes sense. So I know some of the words that Peter might put out there. If anything that it doesn't make sense, what DTI means, debt to ratio, those percentages, don't worry about him. That's why you have a professional. Just give him a call, write a comment below, and he'll reach out to you. And anything that you want him to explain in more detail, he's definitely going to do that and sit down with you. So by the time you're ready to go, you'll know exactly what all those things mean, and you'll be on track to be able to buy a home. Okay, so that's it with the down payment assistance? Yeah,
I think, if anybody's interested, just give me a call and I can see if you qualify. There are a little more restrictions as far as some of them will have an area that will only cover certain areas. Some of them will, can't do manufactured homes. So the best thing to do, instead of going through every little detail, give me a call. I can run a scenario and let you know if this is something that you qualify for. There's also income limitations, meaning that, if you're making too much money, obviously they don't want to do handouts for people that are making too much money. So again, there's a few limitations there, but we can talk about that once we sit down for a consultation.
Beautiful. So if you've been on the fence about wanting to get into a home, but you're not sure if you had enough for a down payment or closing cost, there's options for you. So you can buy a home even without a down payment. We'll help you negotiate the deal. He'll help you figure out how to have all those reserves ready, get the closing cost into the transaction. So there's ways that we can help you get into a home. Just give us a call and we'll walk you through it. Next, What's the next loan?
Well, FHA obviously is FHA is our most common loan, the most popular loan, and the reason that's our most common loan is because it only requires 3.5%, but there's a lot of flexibility with FHA.
Nice.
Right,
Okay.
FHA will allow you to come in with 3.5, but in addition to that, they're very flexible on how you can bring that money to the table.
Okay.
And what I mean by that is that the money can be gifted to you. So if you have a relative, brother, sister, uncle, whoever, they can gift you that money. The other option is that you can actually borrow against your 401k, and there's usually no penalties if it's for the purpose of buying a home. Right?
Okay.
So they're very flexible on how you can bring that money to the table.
Wow, so that's great. So I didn't know that. So I'm always learning, right? That's why I hang out with the smart guys. So the next option is going to be an FHA loan, which it only requires 3.5% down for your down payment.
Mm-hmm.
Very flexible on where the money's coming from, and they allow a gift from a family member for the down payment. And they will allow you to borrow from your 401k. That's great. I didn't know that. So it's an
as a
amazing
matter of fact,
option.
one other one that I've used a couple times, you can actually have, like, if your employer gives you a bonus, you can use that. I've done that before.
Wow, that's
so
great.
I'll say that, some people get a yearly bonus. You can use that as your down payment. So they're very, very flexible when it comes to your down payment and how you're bringing this money to the table.
I love it. So that's a great option. And if you're not able to qualify for that, what's the next step?
Well, let's talk about really quick, just on FHA. I want to bring up one point, is with FHA, you have a 3.5% minimum down payment. You can obviously go higher than that, but keep in mind with FHA, you're going to have mortgage insurance. So if you're able to come in with more money and you can put in as much as, say, 20%, then it's going to make sense to go conventional, right? Which is conventional is obviously, it's been around for many, many years. The difference between conventional and FHA is the FHA is a government loan, and it's insured by the government, where conventional is insured by Fannie Mae, Freddie Mac, which is it's now bought out by the government, but technically it's a private entity, right? Okay. So just to go into conventional a little bit, with conventional you normally start out as low as 5%, and obviously you can go as high as you want, but usually if you put down at least 20%, you can avoid mortgage insurance. So a lot of people ask me, well, what's better, FHA or conventional? Well, the answer to that is depending on how much can you put down. If you can put down 20%, obviously conventional is the better way to go, right? If you can put down, if you can only put down 3.5%, 3%, go FHA. However, I want to point out that with conventional, they're a little more strict when it comes to credit. For example, if you've had a foreclosure, FHA wants you to wait 7 years, where conventional is only going to be 4 years. Okay. Or FHA is 4 years, conventional 7 years. So sometimes people say, well, I've got 20%. Can I go conventional? Mm-hmm. Well, no, because if you've had a foreclosure, obviously that's going to stop you. So in most cases, if your credit is clean, you can put down 20%. Go with conventional. It's going to get rid of your mortgage insurance, and obviously that's going to lower your monthly payment.
Excellent. That's kind of what I wanted to mention as well. So if you don't know what mortgage insurance is, it's basically an additional payment. It's an additional fee added to your payment, and that insures the loan in case you foreclose or something like that. And the bank, the lender who's giving you the loan, is off the hook.
Yeah, so really it's just insurance to cover the bank in case you foreclose. That's all it is. It's to protect the bank, which sometimes people confuse that with hazard insurance. It has nothing to do with hazard insurance. Mortgage insurance, hazard insurance, two completely separate things. Two
completely different things. And again, if some of this gets a little too confusing and a little too much information, don't worry about it. That's why we're here. We're here to help. We just want to give you the information so you know what your options are. All the details, just sit down with one of us and we'll be happy to explain it and go step by step so you won't have any questions by the time you're ready to make an offer for a house and to get your loan processed. So that covers the 0 down payment. That covers the 3.5% down payment. That covers 5% down payment to 20% if you do conventional. What else?
Well, the other one is a jumbo loan, which
that sounds big.
It's usually loans that are usually over 500,000, 600,000. Right? There's a limit with conventional and FHA, but keep in mind with jumbos, there's a little bit more rare because it requires a higher down payment. They're a little more strict on credit. Normally, the rule of thumb is they usually want you to have at least 20%. Mm-hmm. However, there's ways and there's programs where we can do a first and a second and get that lowered. So we might do a 70% first 20% second, or maybe even an 80-10-10, 80% first mortgage, a 10% second mortgage, so that will allow you to come in with only 10%. In order to do that, you have to have really good credit, you have to have a very strong background, good income, and so forth. But there's ways that you can actually get your jumbos down to 10%.
Nice.
If you have a strong profile.
Beautiful. All right, so I hope that helps. I think that kind of covers everything that we wanted to talk about today. So just to recap, if you were on the fence and you need a 0 down payment loan, they are available. It's different for everybody. Every situation is going to be different. The only way you're going to find out if you can qualify for it is give this guy a call. Comment below. He'll reach out to you, and he'll be more than happy to see if he can get you into a home. And then I'll take over from there. After he figures out that you guys that he can get you to the loan, we'll start and go looking at homes for you. So as always, thank you guys so much for watching. If you have any questions, put them down below in the comments. We'll get right back to you. Thank you. Have an amazing day, and we'll see you on the next one.
See you guys soon.
All right. Bye-bye.